Good morning. I'm Benjamin Sullivan, and welcome to Market Monday for August 24th, 2026. What happens when the world's safest investments experience turbulence? This week we found out. Stick around because the ending involves money you may have forgotten about. For decades, U.S. Treasury bonds have been considered among the safest investments on Earth. And on Tuesday, the 30-year U.S. Treasury yield hit 5.33%. That's the highest yield since 2007. On Wednesday, the national debt crossed the $40 trillion threshold. And hours later, the Treasury Department stepped in. It announced plans to at least double its buybacks of long-term Treasury bonds. Now, in plain English, the government is buying back its own debt to calm the market. Yields initially dipped on the news, but by Thursday they climbed right back. Investors sent a clear message. They want progress on debt and inflation, not a Band-Aid. Oil prices added fuel to the fire, with the Strait of Hormuz standoff dragging on. Rising yields pressured stocks all week, and the S&P 500 pulled back from its recent record highs. Now let's shift to Main Street. America's biggest retailers reported earnings this past week. Remember the Supreme Court tariff ruling we covered back in March? The refund checks are starting to trickle in. Walmart and Target received $2.9 and $1 billion each, respectively. Home Depot collected $730 million. Much of that money is going toward lowering prices on store shelves. Here's what matters for investors. The results were strong, but the reactions were split. Walmart beat expectations and raised its outlook, yet the stock fell 9%, its worst day in years. Target posted another quarter of growth and touched a 52-week high, the opposite outcome. Markets have been trading on expectations and sentiment instead of results, and that can punish undisciplined investors. Diversification keeps you in the game. Next week raises the stakes. Nvidia reports earnings Wednesday evening, and on Friday, new Fed Chair Kevin Warsh delivers his first Jackson Hole speech. Markets will hang on every word coming out of his mouth. That brings us to the money nobody is watching. Millions of Americans changed jobs over the past few years. Many left a 401k behind at a former employer. Those accounts often sit in target date funds, which may not align with your current investment strategies, and nobody's monitoring them. If you have a 401k from a previous job, reach out. We'll review the account together and decide on the best course of action. It only takes about 15 minutes. So if your kids or coworkers have switched jobs as well, forward this video or send them our way. That's all we have for you today. As always, thank you for watching this week's edition of Market Monday. Join us again next Monday for more of the insights that matter to your money.